Now that I know that what words I use and say only have 7% impact, I'm going to forget my notes and just walk confidently back and forth and hopefully impress you guys. Anyways, thanks so much for being here. Yes, I'd love to talk to you a little bit about kind of what's happening in the ecosystem from an investing perspective. When Anthony and Zeev and I kind of started talking about what would be interesting given the audience here, and we have a mixed and diverse audience, I thought maybe walk you through kind of the landscape on in the venture ecosystem, sort of the early stage, what's happening there, sort of the what I kind of think of as the death vacuum in the middle, and then a lot of dynamics that are taking place at late stage as well. I think overall, though, there's never been a better time to be an entrepreneur. There's a number of different sort of factors that are coming into play to make it easier to start something, cheaper to start something, having more resources than you've ever had available, and taking much lesser risk as a result of it. So just like it's now so easy to be an entrepreneur, the flip side is actually also true. There's a lot of capital that's also been raised that everyone can essentially be a venture capitalist. Over the last decade or so, there's been a number of different innovations that have taken place within the ecosystem that have led us to more and more sources of funding, and anyone and everyone can become a venture capitalist. The previous slide here kind of was talking about what's happening at the seed stage level. We're at an all-time high when it comes to the number of funds, but what's also equally interesting is that those funds are raising bigger and bigger cash reserves. All that means that there's a lot more money available if you have an idea, in some cases a PowerPoint presentation, and get access to the right folks to be able to invest in your idea. There's also interesting sort of dynamics happening within with cryptocurrencies and ICOs. I'm sure a lot of folks have heard about what's happening there. And for the first time in Q4 of 2017, startups raised more funding with ICOs than they did in seed. So it's an interesting space. We'll continue to keep an eye on it. We've participated actually in an ICO ourselves. We do think that this is here to stay and will have interesting sort of implications and impact on early stage investing in particular. So all of these forces, all of this cash, cryptocurrencies, are all leading to ballooning valuations from a Series A perspective. So what you were able to get back in 2009, the valuation for a Series A startup was about $8.3 million. In 2016, a seed stage startup is getting about the same level of valuation. So that's really blurring the distinction between an idea and a startup with traction, essentially is kind of the point there. So while it's easy to raise funding at a seed stage, what's interesting is it's actually converting, fewer and fewer of those startups are actually converting to getting Series A funding, hence sort of the death vacuum. In 2009, you could have 83% or so of startups were able to go from Series seed to Series A. That number dwindled down to 29% in 2015. And we think it's probably even lower today. So what does that mean? What does that imply for CIOs and IT leaders in the room here? Essentially, it means that for those of you who want to be bleeding edge, who want to be innovative, who want to go and adopt new technologies, there's a lot more noise all of a sudden in the marketplace for you. For you to take that calculated risk and becoming that alpha, beta customer potentially of a seed stage startup now starts looking a lot shakier. So having to do more diligence on the startup, on the founders, on who they've raised funding from, probably becomes a lot more important for you and creates a lot more work. So that's seed and early stage investing. There's also a lot of forces that are changing the way and the landscape of late stage investing as well. First
sort of big move that's happening here and has been happening over the past decade or so is corporates. So corporates like yourselves moving into venture capital and pumping a lot of money into the ecosystem, into the valley. Even new entrants like Walmart and GM and Caterpillar, companies that maybe you wouldn't think of historically as being technology companies. But really, I think the message here is that every company, every industry has realized that they must become a technology company. Otherwise, they may not be relevant. So some of the large incumbents are acquiring startups. If they can't build it, they're acquiring them, or they're trying to build it themselves. So the number of, so if you want to stay relevant, be a competitor, or get ahead of the competition, you got to be adopting technology. It's a busy chart up here, but this sort of talks about the other phenomenon of startups that are getting unicorn valuations. So while there's a lot of funding available up front, there's sort of a death vacuum in the middle. But if you make it through that death vacuum, there's a ton of money available for late-stage startups. And more unicorns are deciding to delay or go public later and later. And one of the key reasons for that is also sort of the big gorilla in late-stage investing in SoftBank with their $100 billion vision fund. And that's really changing the dynamics of late-stage investing pretty significantly. And I think Dara, the new CEO of Uber, kind of put it very well, right? When he decided to raise his latest round with SoftBank, where a lot of the early employees actually also cashed out, including Travis. He said something along the lines of, I'd rather have SoftBank's cannon behind me than against me. And I think that sort of really, but if you're a startup and you've got traction and you made it to through that vacuum, there's a lot more cash available for you to now go out and build a phenomenal company and get a lot of gain a lot of momentum in the marketplace. However, that's still now as an early stage investor or as a VC, or some of you I think are probably doing angel investing. What that probably means for you is that fewer of them are going public, and if they are, they're going public much later. So that leads to less and less liquidity in the marketplace. So only 6% of the unicorns actually achieved liquidity in 2017. Anthony mentioned some of the companies that we backed. We were fortunate to have 4 of them that either went public or were acquired for billions of dollars. So hopefully that gives you a quick overview of what's happening in the venture ecosystem. Happy to take any questions, and I'll be around the rest of the day here as well. For those of you who don't know about Lightspeed, just let me give you a quick overview on who Lightspeed is. We're an early stage and late stage VC based in Silicon Valley with offices in India, Israel, and China. We tend to invest in both enterprise and consumer, although enterprise is really where we got our footing in the door, so to speak, with backings with companies like Brocade, Informatica, Riverbed, Nicira, et cetera, back in the day. And then largest IPO of 2016 with Nutanix, we were the first check and largest shareholder in. Largest IPO of 2017 with Snap, we were the first check into that. And one of the largest IPOs of 2018 with Zscaler, we were also the first investor in that. In between, AppDynamics was acquired for $3.7 billion. We were the first and largest investor in that. MuleSoft, we're the largest shareholder in, which went public last year and then was recently acquired for $6.7 billion by Salesforce. Stitch Fix, we were the first check into, that also went public last year. We had 2 IPOs in India, 2 IPOs in China, and an IPO in India last year as well. So it's been a pretty phenomenal run. We invest thematically. Here are some of the themes and examples of some of the startups that we're backing right now. But the idea here is trying to really catch the next big wave and making multiple bets in those spaces. And for those of you who are really interested in getting more plugged into Silicon Valley, what's happening, we've created a CIO Innovation Advisory Network where the idea essentially is to plug forward-thinking IT leaders with Silicon Valley, with the entrepreneurs, and the broader ecosystem. So if any of you are interested, my email is there. Happy to to chat with you separately on that. So with that, that's all I have. Thank you so much. Have a great rest of the day. How is my body language, by the way? Is it okay? Okay.